Welcome to this week's edition of TFN's Smart Trading Action Alert. I'm Laura Cadden. Despite recent comments by OPEC's head of research that a fair price for crude oil would be between $60 and $65 a barrel, and hints that the organization may increase supply, oil prices are still close to 11-month highs. If the ratio of net long versus short positions in crude futures on the NYMEX is any indication, there's no reason to count on significant drops in energy costs anytime soon. In turn, the outlook for continuing high oil prices has made the prospects of alternative sources of energy extremely bullish. Most of these sources, such as biofuels, solar, and wind energy, still require large amounts of public subsidies to be even marginally competitive with fossil fuels. But with the growing political pressures of environmental concerns, cost appears to be no obstacle in the further development and spread of alternative energy sources. Solar energy in particular has become increasingly popular, thanks in part to the energy policies of China and India. Both countries strive for energy independence and are actively sponsoring the application of solar panels as stopgap measures to their patchy, outdated, or plainly insufficient energy grids. But even within the solar industry, there are considerable differences in the various technological approaches, and of course, in the microeconomic profiles of the respective companies. To help us separate the good from the mediocre, I've invited Red Zone Profits Ian Cooper to give us the inside track on the companies with the best profit potential for investors and traders. So Ian, what sort of potential are we really looking at here?
Well, to look at the potential of solar companies, you first have to look at oil prices. Oil prices recently rose as high as $76, and we got the pullback. That was, that was going to happen. We expected that to happen. But with solar energy, there's a lot of excitement ahead of the Chinese Summer Olympics of 2008. There's a lot of U.S. demand. But again, you have to look at the potential for solar by first looking at the potential for higher prices of oil. Oil prices technically could break out to $80 to $100 over the next year very easily. Consumption is expected to rise another 50% according to reports. All it's going to take is another explosive headline, some Iranian issue, some Iraqi issue, another strike in Nigeria. Any of those things run the gamut of causing oil prices just to spike to 80 to 100, and that could easily happen, like I said, within the year. We also have some incentives that we're looking at for future explosivity of solar names. President Bush in 2006 allotted hundreds of millions of dollars to solar research. Governor Pataki out of New York offered a $5,000 incentive to anyone that put up solar paneling on the roofs. Schwarzenegger promised, a million solar rooftops by 2017, and already we're seeing that kind of the solar momentum affect solar stocks. You're seeing stocks like First Solar. First Solar is up more than 400% inside a year. JA Solar is up about 166%, and then you have Trina Solar, which is up more than 300% within a year. So there's a lot of momentum in this field. You can also look at the solar sector is up 30% within the year. So there's a lot of potential there.
Do you think with all of these increases in the prices, there's still an upside to be had in these stocks, especially since solar stocks are not immune to the rising costs of supply shortages for some key commodities involved?
Well, we see limited upside for solar companies based on very high valuations. Trina Solar trades with a PE of 70, JA Solar trades at a PE of 60, and then you have First Solar, which trades at a PE of above 400. Now, the valuation concerns come into play when you look at polysilicon supply. There's a very high demand for polysilicon supply based on increased growth from the U.S. and China. China and the U.S. are heavily dependent upon this for their solar companies. They want to go more solar. So these prices are currently unsustainable if there's a shortage of polysilicon supply, which there currently is.
Can you explain for our viewers what role it plays?
Well, polysilicon material is, they're the silicon pieces that are used by solar companies to make actual solar panels.
In the panels themselves?
Exactly.
Oh, I see, okay.
Without it, if there's a shortage of demand and there's a high supply, you're going to pay more for polysilicon supply. And there's a big problem, and then the prices of, say, First Solar, for example, which is currently at about $65, is absolutely unsustainable.
So polysilicon is key to these solar panels,
Absolutely.
these cells. So are we trading in our dependence on oil for a dependence on polysilicon in this situation then?
Well, our dependency on oil is umpteen years in the making. Our dependency on polysilicon and solar paneling is kind of in its infancy if you look at it. You know, the solar companies are more desperate for the solar paneling than the average consumer is right now, but that could all change based on incentivized programs so that we could see, you know, further explosive growth of consumer demand. But right now, you know, we're looking at solar company demand.
So what would you suggest traders? Where should they look for opportunities?
Well, there's two ways to play the supply and demand shortage of polysilicon. Current estimates put worst case scenarios of polysilicon supply meeting demand at around 2012. Now, if that happens, if it's 2012, you want to look for solar companies that aren't as heavily dependent upon polysilicon. You want to look at Evergreen Solar. You also want to look at companies that provide polysilicon supply, like MEMC Electronics, which rose from $45 to $65 within a year based on the shortage of polysilicon supply. We're also taking a look at a $13 company, which could, you know, jump on the increased demand. Now, best case scenario, we're seeing estimates of, you know, supply meeting demand as early as next year. Now, if that were to happen, you'd want to buy, you know, you'd want to buy the Trina Solars, the JA Solars, you want to buy the First Solars. You want to buy companies that will continue to ride out the explosive growth on solar momentum.
And Evergreen, you said, doesn't have as much of reliance then on the polysilicon.
Oh, well, they use more of the, I believe, the thin silicon for their paneling.
Oh, I see.
So they aren't as heavily dependent upon polysilicon supply as a JA Solar, a Trina Solar, or a First Solar company.
Very interesting. Good information.
Thank you.
I'll be curious to hear more about that $13 stock you
Yeah.
mentioned later. Talk you into coming back.
Yeah.
For more information on Ian and his trading information service, Red Zone Profits, visit www.redzoneprofits.com. Join us next week for another profitable opportunity on TFN's Smart Trading Action Alert. For TaipanFinancialNews.com, I'm Laura Cadden.